Assalamu Alaikum everyone, welcome back to the channel. In today's video we are going to look at 5 different companies that are in the industrial sector. We've already done 2 videos, one for healthcare and the other one was for technology. What we're trying to do is pick the best 5 companies that meet Sharia compliant, right? They are Sharia compliant, and then share it with you. So that's my aim. Some of these companies I've already invested in myself, and some of these companies I haven't invested. So it's not always just companies that are in my portfolio, but there are companies that are not also in my portfolio that I will include in this as well. Now, this is my portfolio, overall portfolio, because as you can see, I've got one for Trading 212. I've got another one for Freetrade. Combine those two together, only dividend paying companies, and I've got about 35,000 at the moment. My aim is to get basically about $1,000 by the end of this year. And as you can see, diversification wise, it's not working. It's not basically great at the moment, and I'm still working on it. So I'm still trying to add more into healthcare companies that I see that are undervalued, the industrials and so on. So hopefully we'll see how that goes, but I'm still building this portfolio. So all I'm doing here is just sharing my journey. I am not a financial advisor. Everything you see here is just to show you what I'm doing and just for entertainment purposes. Hopefully you find some value in this video as well. So now we're going to look at the industrial sector. As you can see, I have invested about 16% of my portfolio is actually the industrials. So that's what we're going to look at now. We're going to look at 5 different companies that I think that potentially good buy and hold for the long term. I'm a long-term investor. I don't buy and sell all the time. I try to find companies that have a good balance sheet, okay, really good business that have a balance sheet that I know, is not going to go down or go out of business in the next whatever years. And that's basically my aim, and that's what I'm trying to do. I hope you find it useful. If you do, please like the video, subscribe, let me know if you have any questions. All right, let's get to the video. Right, so the first company that we're going to look at is Cummins, or CMI. CMI distributes services diesel and natural gas engines, electrical and hybrid powertrains, and related components worldwide. This is one of the companies that I've included in my portfolio, very, very recent. They are in the industrial sector. They're currently trading $264 per share. They have a trailing PE of 20. Now this is basically just over what we expect. So 20, even 21, I will still take it. That's absolutely fine. Because when you think about the PEs, by the way, you have to think about PE in terms of each sector. So I'm going to do a quick video soon, inshallah, but to explain what PE ratio is and how to work it out. But the PE is important because it tells us how expensive the stock is. And one of the things that you also need to look at is the overall industry, basically for that overall sector for this type of company. So in the industrial sector, if you look at here, okay, they currently about 35.82. Okay, so that is basically the current average for the industrial sector. Some of them, so for the financials is like 16, consumer defensive is quite cheap. Okay, so you can see some of these companies, especially like real estate is actually different. The way you calculate is slightly different, but technology you can see is about 37 as well, right? So when you're looking at this, you also have to think about the overall industry. So because what you're doing is PE, you use it to compare it with other companies and sectors and so on. But forward PE is about 14. This company has a market cap of $38 billion. Current dividend is about 2%, and then they have been growing the last 5 years, basically about almost 6.6% over the last 5 years. And then dividend growth year is only 2 years, payout ratio of 33%. So this is good because what we're looking for is anything below 61. Dividend safety is 98 according to dividends simply save dividend website. So if you look at that, so that is 98. So that is where that information is coming from, because I know some of the brothers asked me where I'm getting this information from. So I will show you as we go along where some of this information comes from. So a lot of it comes from, by the way, It comes from Yahoo Finance. It comes from Simply Wall Street. It also comes from Simply Safe Dividend as well. Free cash flow of $2 billion. The 52-week range basically start from 160. So the lowest that the shares have been is 160 to $277 per share. And as you can see, it's currently trading 264. So it's actually slightly down from where it was. Now the beta, which is basically tells us how volatile the stock is. Okay, 1 and above is very basically volatile. Below 1 is actually quite good. Profit margin of 9%. Now we're looking for about 15, but I am, as an investor, I am happy because of the growth I'm expecting from this company. I am happy to actually get basically buy a few shares. Again, if you set to 15 and that's what you want, then you might need to wait and see if the company, maybe wait for the next earnings and see if things are improving. Return on equity, we're looking about 15, is about 22 here. Now this company is undervalued according to Simply Wall Street by 13% and is currently based on this information comes from Yahoo Finance, so it's a buy at the moment. So Cummins is in the industrial sector. Again, all the companies I'm going to show you here today are the first top 20 on the ETF. So if you look at the ETF for the industrials, either look at the Vanguard or look at the iShares, okay, they are the top 20. So that means basically they're the biggest in their sector. Okay, so that's the first company that we're going to look at. Now let's have a look at the second company. Right, the second company that we're looking at is Union Pacific. This company, offers transportation for goods, so within United States of America, and they have been around since 1862. So it's probably one of the oldest companies. So a lot of the companies that are basically transporting goods from one state to the other use this company, and they have been around for a long time. And there's actually so much talk about this company recently, and I think in the next couple of years you will see the price share going up because of the lockdown, because of what's been going on. Obviously this company was hit hard as well because there's not that many companies that were ordering products and so on, or their goods. So hopefully we'll see how that goes in the next couple of months. Again, I own this company in my portfolio. I'll show you towards the end. Currently trading $226 per share. Current PE of 29, so it's slightly expensive. Forward PE about 20, so that's reasonable. That's what we're looking for. $157 billion market cap, and then they pay about almost 2% dividend. They have, for the last 5 years, they've grown their dividend about 12%, which is amazing. Dividend growth of 15 years in a row, they've been growing their dividend. Their payout ratio is about 45%, which is fine. Okay, less than the 61 we want. Payout, the dividend safety 88%, according to Simply Safe Dividend. Now their current free cash flow is about $5.5 billion. So this is the money they use to pay us dividend. This is the money they use to buy new trains and whatever they need to do to grow the company, right? So the stock has been trading from 161 to 231 per share. You can see slightly down from where it was not long ago. Beta is over just 1, so it's slightly volatile. Again, the industrial sector seems to be slightly volatile in comparison to healthcare that we looked at last time. And then you've got profit margin of 27%, return on equity 32%. That's excellent. That's double what we're looking for, right? And then is overvalued. So it's overvalued by about 10%, and it's currently, based according to Yahoo Finance, it's a buy. Now what I would do if you were interested in this company, maybe wait for a pullback. So at least maybe 210 to 200 probably be the best time to buy. I've been buying, I think 210, and then I had to basically average up because it wasn't coming down, so I bought a couple of more shares, and I'll show you at the end of this video. The next company that we're going to look at is, and that company is 3M. 3M is one of my favorite companies. Honestly, whenever you go, I'm sitting in my office right now, there's so many products that I bought that basically this company creates, from sticky notes to things that on my wall, whatever it is, they do it. Okay, they have, when it operates through 4 business segments. So they've got safety, industrial, transportation, electronics, healthcare, and consumer. The healthcare segment offers medical and surgical supplies, skin health and infection prevention products, oral care, and so on. Now, recently, because of COVID, a lot of the basically masks that you see are 3M, the best ones actually. They develop those masks that we use, and the masks that are actually used in a lot of the hospitals actually are developed by this company. Now, if you're interested in the company, go into their website. You will see they have got millions of products. I'm not even over exaggerating. Currently trading at $206 per share, PE of 21, forward current PE, that is, or trailing PE, forward PE, which will be about 19.5, market cap of almost $120 billion, and dividends almost about 3%. They've been growing their dividend the last 5 years about 6.7%, and 62 years running. So they have been growing their dividend and paying dividend for 62 years in a row. Payout ratio is about 60, which is slightly below what we're looking for, which is fine. And then because of that, their dividend safety is about 75%. So the higher this number, the lower the safety, if you like. 99 is the highest you can go to, you could go up to, and obviously I think when it hits about below 61, it becomes unsafe. I think free cash flow of about $7 billion, and the stock has been trading between $148 to $208 per share, which is not far off from where it is. Okay, the beta is only 0.96, so closer to a 1, and then profit margins of 17%, and return on equity, which is about 47%, which is amazing. I think this is the highest in this group that we're looking at today. The company is undervalued and is a hold at the moment. The reason it's a hold is because I think, even though it's undervalued, on some of the analysts think is undervalued, I honestly think this company is right now overvalued, because the financials and the stock price doesn't add up. It should be about 150 to 170, no more than that. So if you see a pullback, if something happens in the stock market tanks in the next couple of months and you see this company, probably is a good time to add. If you see it 150, 160, 170ish, okay, no more than that. I bought about 11 shares a very long time ago, and I actually haven't basically added to it because the price just went too far. Okay, so that is the third company we look at. We've got two more. So the next one is Emerson Electric. This company designs and manufactures technology and engineering products for industrials, commercials, and consumer markets worldwide. Again, a great company. Not many people know about this company, but they have been around for a very long time. Currently trading $98 per share, PE of 27, forward PE of 22, market cap almost to $59 billion, and then annual dividend yield of 2%. 5-year growth very, very low for my liking, but at the same time, I really like the company and the business model, so I'm happy with that. They have been paying their dividends, so they are dividend kings. So 63 years in a row they have been paying this. Their payout ratio is very modest of 51%. Again, 78% dividend safety. They currently have $3 billion in the bank to use for whatever they want to use it for, and the stock has been trading from 58 to 98. Now, the first time I came across this company, I swear I'm sure it was about 50ish, okay, but then I start buying about 70s and 80s, and now it's gone too far. So I'll show you in my portfolio at the end. Slightly volatile, and I've seen that myself. When the stock go down, basically the volatility means basically when the stocks go up a lot, you make more money, and when the stock goes down a lot, then that means you lose a lot of money. So the volatility is really crazy. Even though if you're buying companies that are trading over 1, then and the stock market is in a bull market, then obviously you're going to make a lot of money, right? But obviously the opposite can happen as well. So profit margin about 12%, again a bit slightly below, but I'm happy with that. I'm happy to keep it, and I'm gonna keep monitoring their profit margins in the next couple of months and see how that goes. Return on equity is about 28%, and then you've got a slightly undervalued company. But what I will say is wait for a pullback. If you, because remember, when the reason I'm saying wait for a pullback is because you need to maximize. You want to buy a great companies for fair value, and at the moment, even though it says undervalued, I will wait at least until it's in the 70s or 80s. Okay, and the reason for that is you will make more money that way. You can start buying it now, it's not a problem, but your profit margins will not be that much, okay, or your capital gains will not be as much. And it's a buy at the moment according to Yahoo Finance. The final company that we're going to look at is Waste Management. Again, great company. This company, all they do is they basically offer collection services, including picking up and transporting waste and recycling materials from wherever it was generated to a basically transfer station, material recovery facilities, or disposal site. So they're the company that takes your garbage. We don't have them in the UK, so they're based in the US, obviously only. I think in North America. I'm not sure if they're in Canada and places like that, but definitely in the US only. Currently trading $140 per share. Slightly expensive. PE ratio of 38. I think this is the highest that we've seen so far today. 25 is about 25 for basically for the forward PE. Market cap of about 60 billion. Annual dividend yield of 1.6%. Again, 5-year growth rate of 7%, which is modest, which is really good. Anything above 5, I would say, is good. They have been doing this for the last 18 years. Payout ratio is basically about 47%, 74% dividend safety. They have got about $2 billion in the bank to do whatever they want to do with. And the stock, as you can see, is literally $4 off where it is highest. Okay, so you can see that's the reason why it's not cheap at the moment. Beta, very, very small. Profit margin about less than 10%. Again, I'm happy to keep it because I think there's a lot more price appreciation for this company. Okay, and the return on equity about 22%, or really overpriced. But according to Yahoo Finance, they're saying is a buy. But I would honestly will not spend a penny in this stock for a long time. I'm gonna wait until I see a proper pullback, then I will look into it. Okay, so that is basically the 5 companies that I want to share with you today. One of the things that I'm going to quickly show you is, for transparency reasons, is to show you where basically my stocks that I've owned from these companies. So for 3M, for example, I've got 11 shares. You can see my average is 158, and as you can see, it's trading about $206 per share at the moment. I'm about up 20%, but I should be up more than that. Okay, but because of the FX impact, so 27%, that's what I would have been up right now. The next company is Cummins. This is new. I'm not up at all. I've only started buying this company. I'm trying to get to about 5 shares in the next couple of months or whatever, and we'll see how that goes. Currently 266 per share, that's what I paid for. It's slightly down, so I don't mind. Emerson Electric, I've been buying this for since I haven't bought actually anything for a long time, but you can see I'm up about 22%, and my average is 75. If you can wait and see if there's a pullback, okay, instead of paying it for 98, if you can pay for 70s, okay, that would be really good investment. Okay, the next company that we're going to look at is, all right, sorry about that. And then we've got the next company that we're looking at is, where is it? Union Pacific. Okay, I've got about 5 shares, up about 3%. Then it's Waste Management. I'm up 20% since I bought. You can see this is $112 per share at the time when I started buying. Right, so that's basically the end of the video. I didn't mean it to go this long, but thank you very much for watching. Please subscribe, let me know if you have any questions. Again, like I've always said, this was just to kind of give you an overview of some of the companies that you can invest in. And again, please don't take this as a financial advice or whatever. I'm only just regular guy trying to help basically brothers and sisters out there that want to do a Sharia compliant portfolio. So good luck with your investment. Take care. Assalamu Alaikum.